23rd of April. Thanks for joining us, guys, in the live room. Let's get the disclaimer out the way initially. Just so, bear with me. Yep, that's it. Any advice or information given in this room is educational in nature and general advice only, and does not take into account your personal circumstances. By viewing any material or using the information presented by Bovarius Capital, you agree that this is general educational material and will not hold any person or entity responsible for loss or damages resulting from the content or general advice provided here by Bovarius Capital Management, its employees, directors, or fellow members. Spot currency tradings have large potential rewards but also large potential risks. You must be made aware of the risk and be willing to accept them in order to invest into spot forex markets. Don't trade with money that you can't afford to lose, guys. The website is neither a solicitation nor an offer to buy or sell spot forex or other financial products. No representation is being made that any account will or is likely to achieve profits. All losses similar to those discussed in any of these sessions. Past performance of any trading system or methodology is not necessarily an indication of future results. This information is for purely for educational uses only. Right, guys, let's get the ball on the way. It's Monday. Now, just to go through the first thing that you guys should all be looking at, let me just bring up Forex Factory, or the economical calendar. Obviously, we play on the economical calendar and fundamentals quite a lot, purely because it gives us a good understanding of how the market's moving. The market generally moves off the back of fundamentals, guys. Now, what we're looking at here, just to run through the news generally as well, this week, guys, it's not as heavy news week. The only thing I can see out there is we've got ECB. Yeah, I think ECB rate decision. I think it's going to be held unchanged. If you get unexpected event, you could probably see the euro breach the short to medium term range that it's in. We will have a look at that as well in the session. You've also got oil inventories as usual. That's a big mover on Wednesday. You've also got some overnight news. You've got the Bank of Canada Governor Powell's speech this afternoon. So be wary, guys, if you guys are holding positions overnight, especially with things like dollar CAD and the cross pairs. Also looking at it, apart from that, you've got CPI for Australian dollar this evening. That's something that will move the markets while we're sleeping, guys. If you're holding positions, make sure that your stops are moved up towards break even. And don't gamble on the news, guys. Remember that. Now, looking through, apart from that, you haven't got much out there. I think it's going to be quite a good technical week for trading. Obviously, this as well. You've got the Bank of England rate decision. I know Bank of Japan interest rate decision. You've got a lot coming out from there Friday night. And you guys won't be holding positions. But if you're looking at it, it's expected that there's going to be a little bit of weakness of the yen. And I think you're going to, if the dollar stays strong, you're probably going to see a continuation of dollar yen. Obviously, it will pull back looking for orders before it runs off. But that is probably the other thing that you want to be looking at, is towards the end of the week. If you're holding positions over the weekend, you could expect big movements, especially from anything with pound yen, euro yen, dollar yen, anything to do with the yen pairs. Now, apart from that, it should be quite systematic. It should be quite technical. The pairs should be moving. Obviously, you have to take into account the movement. Now, this is the other side. This is economical data. This is only 60% of the job in regards to news, guys. Yeah. The other things that you guys need to be looking at is media news, things that you're going to start to see on Bloomberg, CNBC, Reuters. Now, this is what I've been trying to get you guys to look at. The 5 things that you should look at that comes out just before the US session opens up, usually about 10:30. Now, surprise, surprise, the dollar's strong. You've seen the euro and sterling come down off both sessions today. Now, we're probably expecting a little bit more, guys, of a follow through, because it's in the news. There's a lot in the news about the fact that they're trying to make a peace deal between the US and China over the currency trading and the currency war. This is just stuff that you guys need to be made aware of and just be looking at through the news just to see what's going on. You can see there's some stuff coming out fundamentally. Japan needs strong accommodative monetary policy for some time, says Kuroda. That's quite a big statement. Now people will start to position themselves off the back of this type of news that comes out. This is the type of things that you guys need to be looking for, because it helps build fundamentals. You need to be going into these articles, reading them, getting a sufficient understanding of what's going on. Guys, make sense? Now this, look, stocks tumble off the back of Treasury yields. Now you guys know if stocks are down, it's generally a strong currency. If the currency is strong, you're going to see weak. If the currency is strong, you're going to see weak stocks, because obviously it's going to cost companies more money. It's going to be higher cost of GDP. These are the type of things you need to start taking into account, because it does move the market quite well. Now, this bit of news, I think, is what's driving the dollar down. The fact that U.S. Treasury yields near 3%. That's positive news for the dollar, and that's why you're seeing a little bit of a pullback. Now, looking at it on a chart, guys, just to show you guys how the fundamentals are, this is that fundamental move that you're seeing pushed down. If you have a look at it, it's pushed all the way down. This is it. Now, it's going to have to find orders somewhere. Now, if you look at it on a bit longer time frame, it's in a level now where I think personally, yep, it's pushed down because of some news. But don't forget, guys, when the news comes out, it pushes it into orders to find orders. Now, it's definitely going to collect some orders down here, I think. Yeah. Now, just to get a bit of analysis on on euro dollar, obviously, it's in this range. Just to give you guys a bit more understanding, you always need to look at the outer picture, the bigger picture. Euro dollar's clearly in this sort of range. It's making lower highs. Lower lows. Now it's going to do something in these areas here. It's either going to violently break down or violently break up. Yeah. Now, if you ask me, it's going to need news to go above the highs. The same thing what I was quoting on cable, for example. Cable, if you look at it, similarly, it's had massive sell-offs off the back of this Treasury yield 3%, and it's looking for orders. It's now where it's at. It's obviously breached 140. It's probably going to either be heading towards 137 or better price down here 138. Might not get there, who knows? But guys, it's not going to get there in a day or two. It's going to be fundamentally moved. Understanding how this is moving here is going to give you guys better direction. Make sense? Now, where it's breaking out here and what's coming out in the news, guys, I wouldn't be selling the dollar yet, if that makes sense. I wouldn't be buying these assets. I think it's got a little bit more room to maneuver, especially to the downside, and you're buying near the tops of the range, so you want to be staying away. What you apply on intraday can be applied on longer time frames. The reason with why we applied on an intraday is because we like to catch the interim trend rather than just wait or sit on our hands, for example's sake, and not trade at all. It's better to intraday trade to get the entry because you get better positions, if that makes sense. Now, this is what you guys want to be doing if you're asking me. You're looking for sell entries here. I wouldn't be buying it full volume yet. Obviously, there is potential with ECB speaking that they could just completely reverse the move and push it above the high. But no one's got that crystal ball that I keep going on about. So we trade the price. We allow the market to tell where it's going. We don't foresee it. We don't guess it. We never hold an opinion. When you hold an outright opinion, it can put us in a situation sometimes where your ego comes to the table, and when the market goes against you, you start gambling to get it back. Now, coming back, looking at it, there is a zone here. I think a good buy zone on euro dollar, just longer term. I want to be selling it from these levels up here, not these levels down here. A lot of guys ask, how did you get that type of growth in your P&L? It's simplistic. Leave the middle zones with smaller volume, because it's a tug of war between price. Buyers and sellers, buyers and sellers. Sellers come in, then buyers come in, then sellers come in, then buyers come in. Now, this price of tug of war in the middle is very unpredictable. The ones at the high and the lows generally hold up a lot better. Now, if you're looking at it, flicking through, dollar Swiss, obviously euro dollar's coming down. Dollar Swiss generally moves inversely to that. It's coming back up. It's pushing itself up. Dollar Swiss has worked very well on London Opens all week, last week, and I think it's going to work quite well this week. Similarly, London Opens are holding up. The only things that I'm starting to pick up now that I'm going through a lot more P&Ls is the fact that I'm seeing a lot of execution error. Guys need to be crucial and precise in placing your orders off the London Open, because when you guys are not putting trailing stops or not putting take profits or stop losses in, and checking each order, if there's 10 orders, for example, say, you need to double back through each order and double check it, because sometimes there's been execution error, and it can set you off emotionally, either to start gambling or give you a false sense of security. These are the type of things I want to start removing from clients, especially guys that are trading and guys that want to trade long time for consistency. Now, moving on to dollar yen, okay, this is the push up from the dollar. It's had a massive advance from these levels. It's a clear breakout. If you look at it on a daily, the price has clearly pushed itself up. It's having a massive breakout of this zone. It probably will run up to find orders and come back down, but you guys can see this is clear textbook trading, guys. This is fundamentally being driven. Sometimes now, guys, you need to be cautious, especially if you're selling the dollar or if you're trying to catch the counter trend. It needs to be tight risk management, tight intraday trading rules. You need to be managing them aggressively with trailing stops, and in turn, also, if the market does come down and give you the entry to get into these type of levels, don't miss out on it, because obviously it's giving you good entry signals, if that makes sense. Now, this level here, if you look at it, if it breaks out, it should come back to find orders. Yeah, when the market's moving fundamentally like this, I try to just go with the fundamentals, because there's no point of trying to catch a falling knife. You're just going to cut your hands, guys. Make sense? So do look at it like that, and do try to get it in a situation where you're taking into account fundamentals. Now, coming back to that, because obviously fundamentals is massive and we need to play on it a bit more. You need to be going into these articles and understanding them and researching them. If you guys don't understand anything about reading them or picking up the day-to-day understanding, just give us a call or touch base with us. I can point you towards the right direction where you can find out a lot. Now, looking at it, yeah, so obviously stocks under pressure from the back of the from the treasury notes. That's a major thing. So I'll be expecting a bit of a strong dollar. On top of that, you've got. Just let me bear with me 1 second. It's a little bit slow, the internet. Apart from that, you haven't really got much out there. That's the major focal point at the moment. You've got a little bit on discrimination and jobs, but it's not really going to be that big effect. Let's just check BBC News, business. Obviously, you've got the news that Kate's gone into Labour. Not really going to affect the markets, but it's always just it's fundamental news. It's what people are looking at. It's good talking points. Interest rate twice. Let's have a look at this. Obviously, we're set. This is something that I want to touch upon briefly. Next month, they're set to hike the interest rate. Now, in 2019, they're set to hike it twice as well. Now, it's data dependent, guys. If the data doesn't come out as well as it will, they won't do it. So this is the type of thing that you need to be aware of. Currently, the interest rate stands at 0.5 basis point. Economists and investors vote for it to go to 0.25% in the May meeting. That's next month. This will have a massive positive effect on the pound, guys. Yeah, showing a lot of strength. They're bringing the interest rate down. Now, that's what you guys need to be, in turn, focusing on. I think you ain't going to get a push through on the pound unless they do something like this, or something like this comes out unexpected. So it's crucial to keep yourself up to date with it. The BBC is quite good. It cuts out the fat. It gives you what you need to hear, if that makes sense. It's obviously data dependent. We're waiting for CPI and some of the other figures to come out. But I think if you look at it, it could indicate the fact that it could push it above Brexit highs. And that's the crucial thing that you guys need to be made aware of. Yeah. Now, similarly, obviously the euro follows it, so it could hold it up. It could not. Obviously, you can hear euro area. It's in the news. If you guys are reading it, especially you guys that are day trading, you need to be getting in and out of this type of information. You need to make it a second nature. Every time I turn on the PCs, I'm always looking at the news. before I do any trading or before I do anything. It's about preparation. If you're not prepared, don't just trade willy-nilly. Don't just take positions for the sake of taking a position. Understand what's going on from a global perspective. That's the only way that you guys are going to be in the markets for longer term, like 5, 10, 20 years. If you expect to be day traders or profit from the market and call this your primary source of income, or use it as a capital generation, news is necessary. Yeah, and that's something that all you guys need to be looking at. Now, apart from that, Reuters, just to bring it up as well, I like Reuters as well because it works quite well. It's generally the same thing, what we were talking about, Bank of England. Can you guys see how the news is effective? It runs through all media. It's better to look at all once just so you get a better understanding. Yeah? Now, looking at it, if you're coming down, markets are generally down across the board. Apart from that, there's not really much out there. You've got a bit of news coming out. Generally, we've talked about the economical data. Apart from that, there's nothing major headlining across all fronts. Yeah. So I think that's wrapping up the news especially in regards to looking at what's going on in the markets. You guys need to be looking at that. Yeah. Now, enough of the news for now. Let's move back to the market and give you guys a little bit of analysis, levels and things like that we're looking at, because I'm sure that's what you guys are really looking for. Yeah. Now coming back, yeah, just to touch on the rules and just go through it so it's systematic. I'm breeding it into you guys time and time again, so it becomes a second nature. Yeah. The first rule of trading, or any type of trading that I'm looking at, especially for the guys that want to manage big funds, is you need to be selling high and buying low. Now, sell high, buy low seems a little bit too easy to be true, or seems like, why does it keep going on about it? It's simplistic, guys. The institutions, when they buy big volume, they never buy at a premium. When you buy big amounts of something, you're never going to buy at an extra cost. You're always going to look for a discount. It's what wholesalers do. It's what buying wholesale is, if that makes sense. Now, when it comes to trading, you always want to buy wholesale because that's what the institutions are doing. At the end of the day, the institutions are the ones that move the market. They're the ones where when they open a position, the market goes looking for orders on the other side. Now, institutions have a different problem to retailers. Yeah, institutions have to push the price through key levels to create liquidity pools, because you guys know that the market's zero sum. So what I mean by that, A pays B and B plays A. So the money has to come from somewhere, guys. That's why we don't spread bet, for example's sake. We want the money to come from an individual that's either in the market, whether it be a retailer, whether it be a bank, whether it be a hedge fund, whether it be an institution. We want somebody on the other side of our trade to be incorrect and us to be correct, because at the end of the day, the market's zero sum. Now, touching on a few things, I'm sure you guys have heard of contrarian view. There's a lot of traders that trade it. It's where you go against the general consensus because the market's zero sum. So, for example, Brexit, a lot of people were buying, even so, like myself. You got a no vote, the market goes the wrong way, and all the retailers lose all their money because you're on the wrong end, you're on the wrong side. If that makes sense. Now, the market is zero sum. The money doesn't just come out of the air. This is what you guys need to start understanding, that institutions push the price around key levels. Now, looking at it at the moment with these moves and how clean the market's moving, it's clearly moving fundamentally. Look, it's gone out of my 5-day range. Can you see that, guys? Support and resistance, 5 days, 15-minute, 5-day time frame. Dollar yen's clearly pushed up. Yeah, that should indicate me to start looking at the news. I need to see what's going on. Where are things going on? How are the markets moving? Does that make sense? Now, looking at it, euro dollar, same thing. It's come out of the 5-day range, guys. This gives me a clear indication there's something going on in the news. Now, when I look at the news, I see treasury yields are up, and that's the major thing that's moving the market at the moment. Now, this is what you guys need to start understanding, because you don't want to be going against that fundamental move at the moment. You want to let the dust settle. You want to let a few trading sessions settle. Obviously, you get better entries when the news comes out and it pushes it into key levels. That's what I look for. I look for when there's big movements where the orders are. That's what I want to start training you guys to do. Yeah. Now you won't always get these entries because the market will never come back there. So like getting a perfect trade. But you as a trader, you sit on your hands until it gives you the entry. If you guys don't understand that, you'll never understand trading. Trading is all about entry. When you get in and your position is correct, you'll see the movement behind your position. You'll see that there's orders there. Now that comes with the time management. You know the market's not going to just turn in a 15-minute or 1-minute time frame unless there's some news behind it. The market takes a few candles to pick up orders, to pick up direction, and give you an understanding. Now, the major thing that I'm finding with all you guys and a lot of retailers generally when you come in the market initially is that you fall in love with a position or you fall in love with the result rather than the process. Now, what I mean by this is quite self-explanatory. It's when you get a position and it's winning or it's losing and it comes against you and you're unsure of what's happened, for example's sake. That is off-putting, guys, because you've fallen in love with the result, not the process. This is what you guys need to keep understanding. Pick your trades from the entry, not from where you think the market's going to be going. If you take off a supply level and you bring your stop to break even and the market follows through, happy days. You found out for free that your entry is good. That's why we use things like trailing stop. It helps remove all emotion, guys. If you remove the emotion from trading, it makes it a hell of a lot easier. Sometimes when you trade, it's easier to make the decisions if there's no attachment to the money. This is what I need to start embedding into you guys so you guys become more confident. Guys that make a lot of money in trading understand that there's risk to it. Where you can make 100,000, you can also lose 50,000. That's what you guys need to understand. And you need to embrace the risk rather than using it as a situation from hiding behind it, if that makes sense, guys. Yeah. Now, looking at it and just taking a step back, it's clear markets getting fundamentally driven at the moment. Yeah. Now, coming back to euro pound. Yeah, guys, because euro pound as well has had some big moves off the back of it. Euro pound's working very well. The reason why I'm touching on euro pound is because people stop trading it because sometimes it gives them a little bit of choppiness. Yeah, it's the one with the tightest range. In these market conditions, if you're trading euro pound, London Open, or supply and demand, you're getting very, 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 very good entries and very good exits, guys. So do take that into account whilst trading. I'm not seeing enough London Open. I'm not seeing enough guys taking 20, 30, 40, 50 lots off London Open. It's free money. Why aren't you guys doing it? It's placing orders. Yeah. There's one thing that you've got to understand. As a trader, it's easier to place orders and manage the orders rather than taking execution off the emotion. When you take a trade, the reason why a lot of people build positions, and especially the institutions practice this as well, is because direction comes from price movement. Now, nobody can foresee the movement. All you can do is react or be like a solution provider to the price. That's the only way that you're going to catch the move. If you foresee it and hold a view for 1,000 days, you're going to be right or wrong more often than not, just because probability wise the market's very choppy. It breaks through key levels, it comes back, it follows through. Sometimes nobody can understand that but where the orders are sitting. If you can understand how they're building their positions, you can understand that. Now, coming back to just showing you this guys on like a longer time frame, if you look at it, you can see where the big money's buying and selling clearly, guys, because you can see the price getting pushed around. Now, you know from this line here where euro pound is, you're going to get a big move. It's going to be either up or down. You don't know. That's why you don't trade from the middle as much. What you do is you wait for clear direction. Now, if you're coming back to euro dollar, the reason why I'm bringing this up now is because you can see it's coming up into a key like zone where the price is likely to be range bound, guys. It's going to either need some kind of news, or if it does get a big movement down from here and does break out and breach the level clearly, it's got like a £500-600 pip, 500 to 600 pip drop till the next level. So I want to be selling this from this up here, these areas up here, and I want to be buying it from these areas down here longer term, guys. This is how you catch the move. This stuff here is textbook trading. If the market's just bouncing through a range, short to medium term range. As a day trader, these type of market conditions, you should eat the market alive. You should be showing good types of profits when the market's moving like this. When you're getting good ranges cleanly one way because of the fundamentals, you should be making money in these market conditions. If you're not, that means either you're not allowing your trades to breathe for long enough, or you're in a position where you're not going through the process enough. A lot of guys, what I find is you start the process, you have results, whether it be good or bad, and then you just run out of momentum. Make sense? And you stop doing it, or you fall out of love with the strategy, or you question it, thinking this makes sense, that makes sense, this is going to happen. You guys with me? You can't do that. You've got to follow the rules, follow the process. Now, looking at it, just coming back down into it, once you take the first rule, obviously looking at it, this trade down here, if you're looking at it, is you're buying low. It sets the first rule. This is giving me a good level or entry down here. Now, buying low. Second rule, stop loss. You want to be using a stop loss when you're day trading for two reasons. One, it removes a lot of the emotion and it removes the trade management. When you're trading, emotion kicks in. Yeah, three of the most common emotion things that kick in. One, if I not move my stop loss up, I'll still be in the trade and I'd be up. That means that your entry wasn't good enough. If you're not selling at the high and buying at the low, you will never get the follow through because your entry's not in the correct place. Now, when you use the stop loss, it emotionally takes you out regardless of whether you're right or wrong. If you don't use it, you will eventually run into a day where you get a big loss or you have a big drawdown. Yeah, because of either when it moves there, you think, oh, you don't want to take the loss, so you want to move your stop to give it a little bit more time to breathe. But you know that your order's in the wrong place because otherwise it would have bounced from where you should have got in. That's why you guys need to focus on entry. Yeah. Now, obviously, when the market's moving fundamentally, selling from here is a perfect trade, but it's not always going to get there, guys. You with me? It's not always going to get right back to the high. It might just come back, find orders, and come back down. And that's what you guys need to be looking for when the market's moving like it is at the moment. In regards to having a crystal ball, in regards to when the market's range bound, for the last 10 to 14 days, the market has been moving fundamentally. You've been having clean moves one way or the other. It's easy to make money. Textbook trading. When the market goes a little bit more choppy or mean reversion kicks in a little bit better, it's harder to take the profits because the market doesn't have that type of movement, guys. And you guys need to be made aware of that. So the only way to identify that sooner rather than later, 5-day range, support and resistance. If the market moves out of the range, it's more likely to be moving fundamentally. You need to be looking at the news, keeping yourself up to date with it. Yeah? Right. Have you guys got any questions? Obviously, just to get a little bit of feedback. I know I've been working on the fundamentals, but it's crucial, especially when you guys are day trading and looking at the markets now. If you're not aware of the fundamentals, you're not going to hold yourself up long term, if that makes sense. Yeah? Right. Now, just moving on, the third rule, and this is crucial, guys, yeah? Once you've been through a trading session, you want to be getting your stops up to break even as soon as possible. Now, what this does, it allows you to find out for free whether the market's going to move in your favor or whether it's going to move against you. Yeah. Now, it's better to find out for free if you're right or wrong. Don't forget, if you trade with us over here, you get access to the rebate. So if you're getting in 10 lots and the market's taking you out, you're still making $50 in the rebate. Now, that's the type of things that you guys need to start to breed and enhance into the back of your mind. Getting your stop hit at break even shouldn't put you off emotionally. Shouldn't be in a situation where you start chasing or start looking at it and be going, oh, the market's running my favor now. That's what you need to get yourself out of, because what you're doing there is you're playing on the weak retail fundamental mindset. You're playing on the fear and greed. Yeah. At the end of the day, there's two things that drive the market independently: fear or greed. Fear, and the famous saying, which you hear time and time again, is you should be fearful for when others are greedy and greedy when others are fearful. That's the crucial thing about it, especially when it comes to trading on bigger accounts, because sometimes you need to have conviction in your position. You can't trade with indecision, because you can't just buy and sell and hope that the market's going to break in your favor. You have to have conviction of the entry and conviction of the fundamentals. As you go through the motions over longer periods of time, see different events, see ECB events, see FOMC events, see oil inventories. Once you go through the motion 100, 200 times, you become quite confident with it. You're aware when oil inventories is. You're aware of which ones could move the market, which ones couldn't move the market. It gives you a better understanding. And that's what you guys need to be looking at and having a focus on. And that's the crucial thing that I want to start embedding into you guys. You can see the market's moved out of its range fundamentally. It should give you an idea about where, in regards to in-trade management, you know if the market's moving fundamentally, it's just a buy off London Open. It's clearly moving just up. Clearly, if that makes sense. Sorry, there's some messages in the group. Let me just have a look. Who's that come from? Markets is likely to be lots of news out, and technical market is more supply and demand. Levels clean, obviously, to the direction. Patrick, am I correct in saying a fundamental market is likely to be? Yes, of course. Yeah, Patrick, you're spot on there. When the market's moving fundamentally, there's likely to be more news out. Techno market is more likely to respect supply and demand levels, correct? But it's just to give you a better decision. It's like there's only two types of market conditions: fundamentally or range bound, if that makes sense. Either moving trending or it's moving range bound. Now that's the crucial thing as a day trader that you need to be able to understand to position yourself. Are you trading mean reversion or are you just going with the market? That's why I'm making you guys aware of the market conditions at the moment. It's going to allow you to have better trading results. It's going to allow you to have better trading decisions. If that makes sense. So yes, right, Patrick, you're spot on. It's definitely technical markets use better supply and demand. This is clean. Like if you look at London Open, a lot of guys are missing it. Look at dollar Swiss. This as a trader is perfect conditions. 1, 2, 3, 4. You've had like 4 or 5 sessions where the market's just been clean, guys. It's clearly getting driven. As soon as you're getting indication of breakouts in these areas, you know you want to go with the market. You guys should be getting in and holding on the retest. It's giving you opportunities. It's giving you one there. It's giving you an entry there. It's clearly giving you one back there. This is the type of things that you guys need to be made aware of. Now, obviously, it won't continuously move in one direction. You're going to expect the market to come back up and find orders. That's why I've got these orders placed here. These are the levels. I don't want to be selling from these lower ones because what happens, guys, it gets invalidated. I know it's there to catch the trend, but obviously the ones at the low, you don't tend to get the risk reward. So even if you get in and you get the entry, it doesn't follow through, so you can't get out. So forget about them. You're just looking for the intraday range where you're trying to catch 30, 50, 100 pips a week, if that makes sense. Now, just get a bit of feedback as well. Are you guys understanding this? Anything that you want me to go over? Any questions? I know there's quite a few guys in the room now. Is there anything that you guys want me to go through again, or is that a lot more clearer for you guys? Yeah. Great, fantastic. Now, in regards to looking at levels and opportunities, because that's a crucial thing, always come back down into smaller time frames because obviously it gives you more opportunities. So just to go through it, euro dollar, personally I'm looking to sell from these levels here. A little bit of a continuation. There is some buy zones below which do stack up because you're buying very low fundamentally. Now euro and sterling are moving very similar at the moment. It may decouple if you get something come out about the interest rate or they don't hike the rate, but you can see they generally document it in the news as you go along. So they preempt you. So if you start to read it now, you'll get very good fundamental understanding of what's going on. That's why I'm emphasizing and playing and drilling down on the news and making sure you guys are going through the news again and again and again, because that's the only way that you're going to do it. There's no other way of learning the fundamentals by reading the news. When you turn on your PC, you should be looking at news, you should be looking at levels. Now, looking at it here, obviously this is a perfect entry. It probably won't get there, but if it does, I've got some orders placed out. Euro pound, I'm just picking the key levels, and I'm just trying to stay away from as many middle levels as possible. This level's validated because you've got big moves. If the market invalidates this level, obviously it gives you an indication of direction. Euro pound, if you look at it, look at that massive move. It broke down, clearly found buy orders down here, guys, because of the move. Now, I don't think it's going to just go straight through. I think it's going to either come back and go long, or if it does come out, I'll be looking to sell from these areas. There's untested supply levels. This is where, when you look at it, institutions, they will only sell at the high and the low. They won't sell in the middle of the range because why? Wholesale, discount, guys. They don't do it any other way. So you guys need to go. Now this here is a crucial liquidity pool. Institutions have sold from here, pushed the price down, broken a key level. When the market breaks this type of level here, what you'll find, I think, sometimes is institutions will jump on, retailers will jump on thinking the market's going to break. Now this is where that rule comes in. Buy low, sell high. It's crucial. If you're not selling at the high and buying at the low, forget about it. Because if you're selling down here, you're selling at the low. It invalidates a lot of the trades, guys. This is what you guys need to be made aware of. Now, if you're catching it where you're catching buys when you come back down, that's how you hold the positions over a few days and weeks and allow it to grow the account. And you intraday manage it. The move's quite clean to get back up to here. Make sense? But don't forget, do start taking profits when they're on the table as well. If you see 50, 80, 100 pips markets moved in your favor, bank it. We're day traders at the end of the day. We're trying to grow the accounts and systematically use it as a cash cow. Or guys that don't sell at the high and buy at the low, trading will be seen as a burden to you. It'll be seen as something that's stressful, it's emotional. You don't understand why the positions never move in your favor. You have to follow the first wholesale rule. Institutions sell at the high and they buy at the low. That's what they do. That's what they look at. There's no other way to do it. Wholesalers don't buy expensive and sell cheaper. You'll make a loss. They buy cheap and they sell high. It's simplistic. It's supply and demand. That's what the market is at the end of the day. It's got supply. It's got orders. The market goes looking for sell orders. In indecision, as soon as there's an indecision, the market comes down looking for buy orders. It picks up buy orders and then it goes looking for sellers. It's a tug of war between the price. The reason why I've started to flip back into some of the longer term trends here is because you guys need to be made aware of how the market's moving. It's easier to catch the moves if you're aware of the outer picture. To break levels, like looking at sterling, for it to go back through if you look at it, just zooming in, for it to go through these levels here to go towards the high, it's clearly going to need some news, guys. These levels are going to be holding up. I'll be placing sell orders in these markets up here, because for it to go through this, it's going to need some kind of big, good Brexit news. Vice versa with the euro as well. So you guys, it gives you an indication of which way it's going to be going. Now, turning points are crucial. You guys need to be looking at points in the market where it can turn or it can find orders. That's really what you guys are looking for. Where are the institutions coming in? If you can identify the sooner or later in regards to when they're coming in, it will give you a bit more confidence in regards to trade management. It's crucial. These down here could be turning points where the market could in turn now from strong dollar go to a weak dollar. And that's what you guys need to be looking at. Down here, it's a must buy if you ask me fundamentally. If you're trying to get in on that longer term trend, it's here or here is where you want to be buying, if that makes sense. Might not get there, but if it does, you need to be made aware of it, guys. How can you trade shorter term trends without being made of the overall trend? Make sense? Good. Now, just while we got a few minutes as well, guys, any guys got any questions? Anything you guys want me to go through? Just give us a little bit of feedback. I know a few guys pop in and out of the room. The attendance went up there to nearly 30 odd people, so that's quite a lot of people. 20 people. I know some people have dropped out. Have you got anything that you guys want me to go through? Anything you guys want me to look at? Jay, Graham, John, Patrick, all good? Perfect. All right. If there's nothing to go, we'll commence. Just looking at it now, so be aware, guys, fundamentally driven, yeah? Try and catch this. Try and let the market move. This now, I know a lot of you guys are looking for movements. In these market conditions, do allow the trades to breathe. Like, just to wrap it up and just really go through the latter bit of it. Trade management is crucial. Yeah, so obviously you've got the first rules, how to get in, sell high, make sure you're buying low, bring your stops up, remove the emotionness of the trade management, crucial to you guys, crucial to your understanding of the market. But also when you're looking at it, what you guys want to be looking at, trade management is about timing. If the order's there and it hasn't done what you expected it to do within, let's just say, 3 or 4 candles, it's probably not going to do it. Make sense? If it hasn't found the orders where you thought the orders were sitting, the market's order driven. If it's not there, it's going to follow through. There's no orders there. That's what you guys need to start to take into account. Now, it generally takes a few sessions for the price to turn. That's probably not a good example, but coming here, it doesn't turn in just one 15-minute candle. It's taken 1, 2, 3. It's taken the best part of 4 or 5 hours for it to turn systematically, and it turns over different trading sessions. Now, what you guys want to be doing is building up an infantry of positions where your stop losses are break even. Now, the sooner you do that, mathematically, 22% of your trades should run in your favor. If you open 1,000 trades, 220 of them mathematically should move in your favor and should help grow the account. Make sense? Now that's what you guys need to be made aware of. Now repeating the process. A lot of you guys, I'm finding, especially when you're sending me P&Ls at the moment, you haven't gone through the process enough. You haven't placed enough orders. You've picked and choose the days that you want to trade. Make sure you guys now are systematically trading every single day. Go through the markets continuously for 100 to 200 days, apply the rules that we give you, and you will see the results. It's a little bit like when you go to the gym. You need to go through the process for a while until you see the results. You don't see the results straight away, but it helps within regards to in-trade management, trade management. Trade management is crucial. You need to allow the positions to move. Not only allow the positions to move, but you need to see for free whether you're right or wrong. There's no point of taking big losses and holding 100 pip moves to find out the market's not going to reverse. If the market was generally going to reverse, it should have done it in that 10 or 20 pips. Otherwise, there's no orders there, guys. Don't fall in love with the direction of a market thinking that it's going to go up or down. Fall in love with the entry and trade what you see. Trade what the market's telling you. Don't just go with it or go against it. That's basically what I'm getting at. That's the summary bit I'm giving you guys. Yeah. Now, obviously, looking at it as well, just to go through a few of the pairs, cable. It looks like there's not really much opportunity when the market's running away like this. If you're looking at it from my point of view as a trader, obviously I want to be going bigger volume with the trend, but I want to be catching the next intraday trend as well. So I will be looking to go some counter trend to catch the move. That's the only way you're going to do it. I will be trying to protect the positions sooner rather than later, and do start cancelling the stop losses as soon as they hit break even. So you've got an infantry of positions that build up, which are either in turn, you're allowing yourself time to see if the market's going to move in your favor and grow the account. Yeah. Now, apart from that, I'm expecting good technical moves this week. I'm expecting the market to hold this fundamental a little bit more, probably push back, find some more orders, come back down. But I'm looking for a turn now as well. You've seen good moves. Here is key level where the market could turn. Pound, you guys can see that. Euro, sorry. The pound's at a key level, but the pound's actually broken it if you look at it on the daily. No, it hasn't. It's a bit further down, so be aware of that. This market could go range bound between on the pound 143 to 137. On the euro, it could be very range bound with 121 up to 125. That's a good range for us as day traders to get in and out. 300-400 pip range. It's giving good movement. It's giving good risk reward on a 10 to 20 pip trade. When the market goes a bit more choppy, like it does here, for example, the rate is harder to trade. The movement's not on the table. Make sense? Now, also looking at that, we're expecting a follow through if we're looking for a weak dollar. We're probably going to expect dollar yen to go. Obviously, we've got Bank of Japan speaking as well over the weekend, so be wary of that. It could move the market, could gap the market on Sunday. So it's just something to be made aware of. But these market conditions, guys, are good. They're good practice conditions. They're good to get you into the understanding. You're understanding fundamentals, seeing where the technicals are holding up. There's not a lot of news. I think the technicals are going to start to play good over the next 5 to 10 days, like the fundamentals have done over the last 10. Make sense, guys? Right. What I'm going to do, is there any more questions, any queries, anything like that? No, good. Got thumbs up. Good. Right. Thank you very much. Where's that? No, I can't see it. Oh, sorry. Fantastic, Patrick, you got a question. So if the price is 100 pips away from the supply or demand level, is it likely that only the news will move the... Yes, spot on. News, or if the institutions start go looking for orders. So you've seen it once or twice. The news gives you entry. I've talked about this time and time again. But obviously there's not a lot of news out right now, so you're not probably going to get the further entries that are away. But when the news comes out, you're right. You're spot on, Patrick. It pushes the price into key levels where it finds out where it finds orders. So be aware of that. When news comes out, it does push the price into orders, especially when the pips are far away. Like you're saying, if it doesn't get there, it doesn't get there. It's like if the price doesn't get to where you want it to get to, you don't take the trade because the risk reward will be out, and you could get caught on the wrong side, or you could start to get in time and time again and not get the full move and keep getting knocked out, and it plays with your psychology. The reason why the rules are there, if the rules are built on top of each other, they'll give you a clear pathway to catch moves because you're following basic rules that institutions look at. What institutions do is Goldman Sachs, JP Morgan, they take guys from the top universities, top red brick universities, and they bring them through their graduate programs for 3 to 5 years. They inbred this in these guys. They teach them the basics. They teach them the fundamentals. And then they put them in the markets with the most amount of capital and the highest skill set. That's why they stand a better chance. But nobody said that as a day trader, if you understand the rules, you can't beat them. At the end of the day, a lot of people do hit the banks. That's what guys like Soros do. They individually built up massive amounts of wealth. Now, when you're hitting people in the markets, who's the biggest liquidity provider? Who sits with the most amount of capital? You're right, the banks. They're the ones that provide the liquidity, most of it anyway. 80% of liquidity comes from the institutions. So this is what you guys need to start to be able to build yourselves up and build your understandings of. But you're spot on, Patrick. Generally, the news is what's going to push the markets into key levels. If they are a little bit further away, just because the market doesn't get there shouldn't put you off. It should put you in a situation where you're more confident, because if it doesn't get there, it just means you didn't get your entry, guys. That's all. There's no two ways about it. Anyway, I hope that was sufficient, Patrick. What we'll do, there'll be more sessions, obviously. Now we're getting a little bit more attendees. That's good as well, guys. Any guys that want individual coaching sessions, just to want to touch upon anything, go through anything, whether it be fundamental, whether it be strategy-based, whether it be psychology-based, don't hesitate to get in touch. I know I've booked a few coaching sessions with a few of you clients that we're going to be touching base with as well individually, just to home in on some of the skills, the in-trade management. The training and the guidance is there, so you guys might as well take it. It's on the table, if that makes sense. All right, guys, I'm going to wrap it up for today. Happy trading. Do look out for key levels. Market's getting driven by fundamentals at the moment, and we'll see how things pan out. Happy trading, guys.